Hi guys, and welcome to today's market update. The market's pretty choppy today. If you look at the S&P 500, it's currently down 1.5% as we speak. At one point, we're in positive territory. It was 1.5%, 2% earlier this morning, and now currently the sellers did come back in. So the upside is that sellers did retest yesterday's high and the day before, which was 24.98 and 24.70. So there's a range around 20 points in terms of a supply level. Currently, the prices are testing in terms of demand, where at this point, sellers aren't willing to sell below certain price points, despite perhaps buyers are also making an offer below those price points, but sellers are not willing to sell within those prices. So this is a good thing. Price is currently at a level of demand, and the chances or the probability now increases a little bit higher that there's going to be some form of a reversal in terms of rebound, where the exchange of hands from selling to buying is now a little bit more stronger. So as a disclaimer, guys, I'm here just to give you a piece of information, and I'm not giving you any form of advice. Please make sure to see a financial advisor if you want to know more about investing or trading. At the same time, please take full responsibility for your own actions in regards to, especially in this field, in terms of trading or investing in general. I would recommend to get educated, and hence giving you these free pieces of information to just get you educated on what's really happening in the markets. We're offering as well beginner lessons. So if you're interested with that, please make sure to email me at esttraders@gmail.com. So in the S&P, same thing was happening with the Dow, where the Dow currently is down 1.2%. Tested as well yesterday's high and the high before that, 20,514 and 20,946. High of today is 21,000. So that's great news. And despite sellers did come in the end due to oil price plummeting, due to the coronavirus, due to the uncertainty still of the marketplace, and hence right at this point they don't know where to go. We can't ignore that sellers are currently, in terms of selling pressure, so sellers are currently in control. Despite, when you really think about it, between buying and selling, buyers do have the power because they're the ones who can get the discounted price. The advantage of what you can see, you're currently seeing at this point, even though buyers have the power of looking for discounts, no one's willing to go below yesterday and the day before's low, and hence their lows are actually higher. So that's a really good sign in regards to institutional buying in terms of as a professional observer of the marketplace. And if we look at the VIX, which is connected, which is the volatility index of the S&P 500 right there, where you can see there's a gap from yesterday's close and today's opening. So the odds that are also going to fill that gap is also highly probable. They retested this demand around 55. So there's going to be some form of a continuation of a correction before a continuation of price to go to the upside, which now means that longer term, we're still basically, there's probably more selling pressure to the downside sometime in the near future. Okay, so that also affected within the dollar index. So if you're following our videos from yesterday on the reason why the major currencies actually dropped significantly is because of the dollar index. If you're not familiar with the dollar index, it simply tracks the US dollar based on 5 or 6 different currencies globally. And you can see here that at one point sellers did come in, and now buyers push the price back up to where it almost started. So still also a lot of uncertainty. Odds and probability that the dollar will keep on going to the upside is more than likely. It could potentially go to 110, 116, somewhere here, 105, 106, sorry, then all the way to 110. And potentially can go to 120 based on 2001, 2002. Okay, so that's the probability. Only, of course, if it breaks certain price points. It's also approaching 103.82, which was the high of 2017, I believe, somewhere there. Yep, January 2017. So this is based on a bigger time frame, but if I go to a smaller time frame, you'll see here you have a hammer, or actually a hanging man, meaning that buyers did come in at the very end when there was a lot of selling pressure. You'll see in a smaller time frame, you can see here that in between they did come back before buyers saw it as an opportunity, cheaper price, and basically got in, and that pushed the price in terms of demand, in terms of the price to go to the upside, creating a back in the level supply. So if this creates a lower high by Sunday, then definitely you'll see a correction of the dollar short term. Okay, so that's what's going to happen. So what happens though with the rest of the currencies, like the euro, which has the highest weighted mean, created actually new lower low, tested major supplier there 108. So there's also a potential correction that's going to happen only and only if you'll see a clear cut that no one's going to go today's low. But other than that, if sellers are still currently in control, this is going to keep on dropping to basically to the downside around 105, somewhere here. Okay, currently in the demand actually. So 105, 106, and then major low 103.34.7. So not 300 pips to the downside. So it's too powerful, way oversold as well. And it's just a matter of time that you're going to see some form of a correction before a continuation. Created now a new lower low from a higher high perspective. Next transition, next step basically from here is just mainly a lower high. So once again, if you want to know more about all this type of terminology, if you're new to this and you want to know more, or you're a novice trader and you want to get more information or knowledge, then feel free to email us. Happy to give it to you in terms of offering the beginner course to you with a 30-day support. Right, moving forward basically from there, and from the dollar index perspective, that basically is also in relationship with oil. You can see here at one point it was positive, and now that the dollar is coming back, basically they also pushed now the price to the downside. Great news once again, the highs sellers, or basically they retested those price points, and no one's also willing to go below to yesterday's low and the day before. So that's also good news. Odds and probably you can see in terms of a slowdown from here on forwards is going to be some form of correction, and hence the dollar CAD also has an opportunity in regards to a minor correction to the downside before continuation to the upside. Actually, in the span of a few hours, it dropped about 200 pips before it come back up. So that was a good trade, basically, that happened today. And if I look at gold, gold is currently 0.6% up. Notice it also went up. Normally, this has a inverse relationship with the dollar. Okay, so in terms of macro fundamentals, so today there has some form of inverse relationship, which is awesome. And what we're looking for when that normally happens, anomalies creates what we call divergence. Okay, so right at this point, back to the level of demand, adds in probability in terms of a change from selling to buying is also highly probable from a form of a correctional standpoint. And hence, when this happens as well, then you'll see that the CAD is also going to increase in strength, right? At the point in time is getting battered by the dollar. We also see, in terms of the dollar Swiss, some form of a correction that's also going to happen. So they also retested certain price point before buyers did come back in. So now you have a new clear cut of a new higher high. If this one fails, then a higher low will be simply be put into place in regards to a transition. The pound basically got battered and at one point it was majorly up, and hence selling pressure now to the downside. So everything is simply have the same pattern. I would have loved for the Aussie to close approximately 59 somewhere here. Despite a higher high and a higher low and uncertainty, yes, there could also be a probability of a change of exchange of hands from the buying to selling to go within this range between 61 and 63 of a strong supply, which approximately like 500 pips to the upside in terms of price, profitability from a um, cheap selling perspective. Okay, risk is actually very small compared to the reward. Yes, still a lot of selling pressure to the downside. Don't get me wrong, but there's going to be some form of a correction before a continuation of price, because everything's just way oversold. It's just probably a matter of slowing things down. Once it's some form of security of certainty, then you see that the market is going to come back to where, in terms of stability, that's what we're looking. That's the word I'm looking for, in terms of stability. All right, so that's my short market update in regards to what's really happening. Everything's just news-based, still from the fear-based security component, and people still don't know. Okay? And now there's a lot of companies are currently being closed that wouldn't help either in regards to the whole global economy. All right, guys, this is it from me. Hope you enjoyed basically staying at home, and so please make sure to stay safe out there. And if you're trading and currently it's very volatile, decrease your positions, have tighter stops, and just be responsible with your trades. Likewise, for me, this also is something that also that it's very important as a trader to manage basically one's risk. All right, take care until next time. Have a great weekend, and thank you for listening. If you like the information that you're currently receiving, make sure to click the subscribe button. I'm building a new channel in regards to trading. So yeah, let's increase this amount of subscriptions, and not only that, you'll get more automated videos when you currently have subscribed. It just pop up basically on either your phone or your computer. All right, take care until next time. Happy trading.